you all for joining the afternoon session of the R.I.S.E Leaderships Conference. And we are the panel on Money on Your Mind, Financial Empowerment for Today's Woman. Today, we're going to be discussing building wealth, financial empowerment, and your legacy. My name is Charon Rose, and I'm your moderator for the panel. I am the Director of Outreach and Constituent Relations for Rhode Island General Treasurer Seth Magaziner. I handle a lot of our outreach and community-facing work, with that portfolio, I also handle our financial empowerment work. And so I'm very happy to be joined by 4 practitioners and 4 women who are doing great things in the field. Today, we're going to be discussing, again, building wealth, financial empowerment, and your legacy. And we're going to start off with introductions as well as a lesson that we've learned in our past, a financial lesson that we've learned in our past. And my financial lesson that I've learned in my past was to be more diligent in paying attention to student loans and understanding what free money is when it comes to college financing. I shared earlier that I actually had taken out extra loans to go to Miami without realizing that you have to pay the loans back. And so I ended up financing trips, spring break trips to Miami without understanding that I actually had to pay those dollars back. And once I graduated and started paying back my student loans, I realized how expensive those Miami trips were. It might've been $1,000 at the time, but it ended up being much more than $1,000 once I paid those back. And so that is one financial lesson that I've learned, and I'm going to kick it over to our distinguished panel, and we're going to start with Claudia Cardozo, who is the Community Development Manager at Harbor One Bank here in Rhode Island.
Hello, everyone. Good afternoon. It's such a pleasure to be here again among such a esteemed group of panelists. I have to warn that for some reason I have the city doing construction in front, so I may mute in and out if that happened while I'm speaking. So I work for Harbor One Bank, and in that role as a community development manager, I'm able to help individuals and business owners to increase their financial health and business acumen. It's something that I'm passionate about. I think a lot of the work that I do is because of the lessons I have learned in my, the hard way. So one of the big lessons I had is understanding the dangers of credit cards. So I came to the United States in 2002 as a newly arrived immigrant. I was advised to start working on my credit as soon as possible, and credit meant opening many credit cards. So, then I later understood that it wasn't about having many credit cards open and not using credit cards as solutions to the money that I didn't have, but learning how to use credit cards as financial tools. So credit card debt is very toxic. I think many of us need to do a better job in that area.
Thanks, Claudia. And next, we're going to move on to Roxanne Cook, who is the Regional Director for New England and Pennsylvania at JP Morgan Chase.
Ron, thank you so much. It's just fantastic to be back here again this afternoon, having this important conversations around money matters and money on our minds. But first, I want to just say thank you. I want to say thank you, first of all, to my panelists, my fellow panelists. I learned so much from them during the first session, and our fantastic moderator who did a great job moderating. But I also want to thank Helena. And putting this R.I.S.E series together. This is my second year participating. I participated in the previous panel with the young women, and I'm blown away. And I just know our future is in good hands. So as we think about our future being in good hands, for me, I'm the regional director here at JP Morgan Chase, regional director for New England and also for Greater Pennsylvania area. And my role as a regional director is really to bring the branches. We were here prior to, in terms of other lines of business, but my job is to open the 100+ branches that we have to open across New England and Pennsylvania. And quite frankly, the reason why we're opening branches when others are closing doors and other things are happening is really to make sure that we're there. We have access, people have access, the underbanked, the underserved, and there's access for all segments of the population, whether it's students, whether it's the affluent, or whether it's those who are starting on their journey. And I was one of those people, right? Underbanked, underserved, lived in an underserved community, first generation student, went off to college, and we are bombarded. Students are bombarded by credit card offers. This is your first introductory to credit card. And I was no exception. I signed up for a credit card or two or three and signed up for the many credit cards, but I did not, it was premature. I did not have the financial literacy to be able to say, how do you borrow wisely? And so I remember distinctly that I purchased pizza, and because I didn't want to eat the dormitory food, and I purchased that box of pizza for $10. And oh yeah, you do have to pay that back when the monthly bill comes, right? And that was far. And so I learned a hard lesson with the late fees that kept adding up, and the hit to my credit score. So for me, my biggest lesson learned was you can leverage credit card. There is such a thing as good debt, but you have to borrow wisely and make sure that you're paying back according to what the plans have outlined are. So I try to share that story and that message to whether it's students and whether it's those who are new to credit or others, that you can borrow wisely, but make sure that you have the literacy that it takes to be able to pay that back on time.
Thanks, Roxanne. And next we have Meredith Curran, who is the Director of Special Projects for the Office of the Governor, Gina Raimondo, here in Rhode Island.
Thanks so much, Sharon. This is such a great group of rock star women, and I too have learned so much from them today. And I hope our listeners are learning as well. I have made a number of mistakes financially in my life. The one that sticks with me and stings is when I was applying for my first job out of college. I was lucky enough to go to college in a time where you weren't offered credit cards. So I didn't have the credit card debt problem, but I was trying to go out on my own. I'd done a budget, I knew what I could live on. And when instead of making me an offer, they said to me, what's your asking amount for your first salary? And I said, this is unbelievable, but it was 1981. $12,000, because I knew I could live on $1,000 a month. I'd done the math, and they offered me $16,000. So that's 30% more than what I asked for, which told me I had way undervalued myself. They got me for a great price. They were probably willing to offer me 20 or something, but I really learned that I should have done my homework. I should have gone to the career development office at college and checked, what's the going rate for entry-level banking jobs. And I hadn't done that. And it was harder back then to do the research, but I should have called and asked around and gotten better information before I went in. And so I've learned never again to undervalue and undersell myself in those situations.
Thank you, Meredith. And finally, we have Carrie McLaughlin, who is the Director of Financial Education at Pawtucket Credit Union.
Thank you, Charon. And I just want to echo what my other panelists said about how this is such a fun experience for us, and to have these conversations where we get to talk about the work that we do and why financial empowerment is so important to us, and the things that we learn along the way. But for me personally, one of my pivotal experiences having to do with money and how I relate to money wasn't actually because of a direct choice that I made. So when I was younger, I think I was going in between middle school and high school. My mom, single mom, worked herself night and day to be able to put me through school and provide for a safe, secure place for me to live. She was at work one night and she got ill while she was in the hospital. She was a nurse. And then because she got sick, she went out on leave for a while we tried to figure out what was going on. And she's fine now. She was able to switch positions and be able to recover from that. But in the meantime, while we were going through that period of uncertainty, the phone kept ringing constantly. It was bill collectors and credit card companies looking for their payments. And that really shaped how I look at personal finance, because I never ever forget that yes, finance has a lot to do with our own personal choice, but we can't separate that out from the environment that we're in, or the choices that we have, or how our family and our culture and all those things interact and how we make decisions. Plus, I was also very humble when I make a lot of my own personal decisions, because I realized we're not really that far from the edge, even personally. So kind of reminding of that and trying to build in those safety things. So that was an early lesson learned via my mom. But we can't take out all of the time of the panel to talk about the incredible things I learned from my mom. But that was one of them.
Thank you, Carrie. And so from that, we're going to transition right into our discussion. And I'd like to pose my first question to Claudia, which is, what is financial empowerment and why is financial empowerment important, particularly for women?
I'm doing it again, sorry. So financial empowerment focuses on improving the financial security of individuals and encourage them to commit and successfully achieve their financial goals. So being financially healthy is not just about having enough money to cover expenses, but it's about feeling emotionally at ease with your financial choices. Many times we know what we have to do, yet we don't have the resources or the skills, the know-how on how to do those things. So that's why financial empowerment is so important, because it's through practitioners, to different resources out there, that we can empower individuals with the tools and the skills they need to make better financial choices. We still live in a male-dominated society, so it is extremely important for women to have a sense of independence and feel that they have they're empowered to do the financial choices to have better lives.
Thank you, Claudia. Before we move on, did anyone want to chime in on that?
I will just say, in terms of, women, and there are so many women who are head of households for whatever reason, and women in terms of the empowerment, right? They're out there, they're earning the funds too, and they want to be equal partners in the decision making in those households. So we're seeing that and hearing that even more so. So this is why this conversation is important, and especially for women as they lead and become head of households and really become partners, equal partners in the decision making of their households and their finances.
Thanks. And Roxanne, my next question is for you. How does one set smart, reasonable financial goals, and what is the importance of setting those goals? So as we're thinking about women and women becoming more of the workforce and more of the head of the households, how would I or one of you all put in place some smart, reasonable financial goals?
Yeah, and I want to tie it back to what Claudia said, and it's about just really financial empowerment, and we call it financial well-being, right? And so when you think about the vision and the mission of JP Morgan Chase, what we say every day, what motivates us and drive us is we want to help customers make the most of their money so that they can make the most of their lives, right? It's that important. It's what the money does, right? And how it can help these women. And so for us, we think about it from setting smart goals. And we typically hear SMART in the acronym SMART to say specific and measurable and attainable and relevant and time bound. But we look at it from a different lens. When we look at that second M in the acronym, for us is more than just the measurable, it's the motivation. So what's that motivation? And so the goals, it's personal to every individual, and it has to be personalized. So when you're setting that goal, understand what your why is. What is the motivation? If you understand that motivation, you'll be more so determined to achieve that goal. And so we say, set vision boards, write it down, make it actionable, tell it to an accountability partner. As we think about Sharon, one of the statistics we keep hearing is the majority of Americans, 70+% is what we keep hearing, don't even have $400 set aside for emergency savings. So we take that really, really passionately, and we want to do something about it. And my partners here on that line as well, you know, when we think about the inequities and the wealth gap, we take that personal. And so it goes back to setting that specific goals. That's the motivation needs to be behind it, that why. It needs to be actionable, and it can be small goals. It doesn't have to be the lofty goals like we typically hear around purchasing a home or retirement planning or college tuition. Those are the ones that we typically hear, but it could be a small goal, something as I want to save for emergencies. I want to save for those unexpected bills, and start small. It could be something as small as $10 a week or $1 a day. If you think about it in bite size, $1 a day, right? And you use autosave and some of those features, then you can certainly hit those goals, but make it very specific. Make sure you have the motivation behind it, have an accountability partner. And that accountability partner also includes your bank partner, whether it's your financial advisor or your banker. Make sure there's a relationship similar to how you would have in going for your doctor's appointments and your checkups. Make sure you're doing that with your banker and your relationship. We call it relationship bankers. Make sure you're having that same relationship with your banker, because this is a journey, right? It's not a race. This is a journey. So just really be specific, write it down, making it actionable, and it's personalized for everyone.
Thank you, Roxanne. And so when we're talking about accountability partners and relationship partners, right? One of the things that I know, I very rarely go into the actual bank, right? And so I do a lot of my banking online and on my phone. And so even hearing you say it's really a big deal to have an accountability partner and a relationship with your banker just puts in the back of my mind that it doesn't hurt to actually walk into the branch and have conversations with people instead of just going to the ATM, my phone, or online banking. And so I really appreciate that for myself. And my next question, in piggyback of Roxanne, is to Meredith, and how does one get started on their financial wellness journey?
Well, thanks for that. It's a good question. I do want to say, I just had a pop-up saying my internet's not stable. So if I cut out, just move on and I'll get back in as quickly as I can. But what I've learned over the years is that financial empowerment and well-being goes hand in hand with financial literacy. So there's information out there. You're not going to start out an expert. And I always tell people, I was an English major in college. My very first finance test in graduate school, I got a 12 out of 100. So I did not start out of the gate as an expert. And it was hard to learn some of the stuff, but it's very, very empowering to learn it. So there's resources online. I read the Susie Orman book because she was the sort of financial guru of my day. There's many, many more resources that a lot of these other panelists can tell you about. I heard about some great ones the last session. So lots of ways to educate yourself, because if you understand compound interest, if you understand how to structure your own budget, if you understand how to decide what the right savings level is for you, you're going to feel really empowered by having all those tools at your disposal. It's a very worthwhile use of your time.
And thinking about empowerment, Carrie, what are the most important questions a woman should ask herself to evaluate her current financial situation?
Thank you. I absolutely love this question. And the thing about it that personally, from my own personal work, the thing I love about personal finance and why I have been studying personal finance ever since I was in college at URI is because of the fact that it is so personal, right? Most of being able to manage your money and meet your financial goals is to, as Roxanne said, find your why, find your motivation. And then once we kind of focus on what our goals are, then we try to figure out how it is that we build in safeties to kind of keep us on track. So what are the things that we need to do? What kind of rules do we have to make with ourselves? Our kind of a agreements to be able to keep us focused towards whatever those goals are. And so I absolutely love the conversation that we've already started having. But when you're just getting started, sometimes understanding your financial situation, it just feels so incredibly overwhelming. And so a lot of us, when we get overwhelmed, we just start avoiding. So we just kind of get into that habit of, we have money coming in, we have money coming out, and we kind of just like, do I got enough to cover this bill? Okay, good. And let's just keep going. And you're kind of doing yourself a disservice when you're not really taking the time to sit with your finances and really give your money a job and kind of look at how you're using your finances. So what I would say to ask yourself would be, how do I feel about my situation? Do I feel secure? Do I have enough money coming in where I can meet my monthly obligations? And if I think about myself in the future, am I secure in that too? Is my savings set up in a way that if a year from now or 2 years from now I get into this a financial hiccup, am I going to be able to have the resources to be able to deal with that financial shock? And that kind of gets down to the core of what financial well-being is. You know, do you have choice and freedom and security with your money right now? And if you can't overwhelmingly say, yes, I feel good about my money, I feel good about where I'm going in the future, then you have to stop and say, okay, well, what would have to change about my situation to make it so I do feel okay? Right. And I know for me, the thing that makes me feel better is knowing that I have emergency savings, knowing if I throw off my headset and walk out the door, I'm going to be okay for a while I figure out what my next move is. Or whatever it is my insurance level enough that if I get sick, that things are covered? Or if I get into a car accident, am I going to be able to pay my deductible with no problem and be able to still get my car fixed? Or is it going to be some kind of crazy emergency? So I kind of think if you can put yourself into different situations and say, oh yeah, I'll be okay, then it's good. And if you put yourself in those situations inside your head, when life puts you in those situations and you're not going to be good, you're not going to be good. So I think just kind of taking the time to really think about it and giving yourself the permission to really say, you know what, my finances are important and I know they're scary, but I'm going to do what I need to do anyway.
I see a lot of head shaking, so I'll pose the question to the entire group. And is there anything that you think that women should be thinking about as they're reevaluating or evaluating their current financial situation?
So things to keep in mind while re-evaluating their financial situation, you said?
Yes, so, you know, right now you're looking at your budget, or you don't even have a budget, and you're trying to figure out, you know, exactly what Carrie said. What are my priorities? What are some of the things that I want to get done financially? What are some of the first steps that I need to think about? And so just wondering if you have any additional insight on that.
I want to comment, yeah. So I love, you know, Roxanne's comments about financial goals, the importance of that. And Carrie, you know, really emphasizing that you have to confront your finances, right? Sometimes it's very scary, but you have to do that. So I think that is very helpful where when you are in that process to understand what financial well-being is, right? So it's basically a mindset that allows you to fulfill your financial obligations, that give you some sort of security about the future because you're saving, right? You're creating a better future for yourself, but it also allows you to enjoy life, right? So when you know that that's a mindset that you have to have in order to manage your financial resources, and you see them, right? You're able to see all of your income, all of your expenses, and you start analyzing your spending patterns. When you understand what your values are, you're gonna know where can I modify things, right? So, but if you don't confront your finances, or you don't have those financial goals, there is no tools or motivation for you to get it done. So I just wanted to mention the fact that it's important to understand this definition of financial well-being and to know that you have the power of choice to spend every dollar accordingly to those things. And that is all about how you spend your money, how you save it, how you borrow, and how you plan for the future. That's going to give you that sense of control over your money.
So I would just share, Claudia, you hit it head on, and Carrie, so did you. And the important piece is just start. Just start. And you may not know where to start, right? But that's where you go to the experts or go to someone for help. So for me, if I'm feeling ill, I pick up the phone and I make an appointment to go to the doctor's office. And the doctor talk through, what do you want? What's going on? And then there is a recommendation at the end for me to follow. That's the same thing that we keep talking about. Speak to your advisor, speak to your banker. And Charon, I want to go back to where you said, just go into the bank. COVID has taught us that you don't have to go into the bank. People can bank how they choose, where they choose. And so you don't even have to go in. I didn't have to go to the doctor's office physically this spring for my appointment. We had a consultation over the phone. And so you can do that with your banker, whether or not you have an account with them. Just start that relationship. Many of these banks have an online tool where you can just schedule an appointment. You can either walk into the office or you can have an appointment over the phone. They'll validate who you are and they'll have an appointment over the phone to talk through. It's important for you to be upfront, be transparent, and they'll meet you where you are. And it's personalized. So it's about meeting you where you are. It's non-judgmental. There's no judgment zone here, right? It's just about where do you start? And I know my colleagues are here to say, we're there to be there to help you. Wherever you want to start, we'll meet you where you are. Just start.
I think that's a really nice segue into my next question, since Claudia is one of those individuals at Harbor One that works with clients. What are the biggest challenges some of your clients face and what can they do about it? And so, Roxanne just started talking about just starting. So if you could go from there.
Yeah, absolutely. I mean, due to COVID, I do see a lot of my clients, underemployed, some of them, unemployed. Some of them pursuing entrepreneurial endeavors just because they have to put food in the table, but lacking the business acumen. So I work very close with them. We have programs where we help them, increase their FICO score for their financial goals, or help them, to get access to capital in terms of the business. And what I would say is that going back to the financial literacy, right? You do have to get the information. I mean, I think we have repeated it already here in this session today, the second session today, that is understanding your options, right? Seeking for help when you don't know what to do next. And a very simple tool that I always like to introduce is the spending leaks. It's just a handout that we have. Actually, it is from moneysmart.gov. Oh no, I'm sorry, it's smartaboutmoney.gov. And that is a tool that helps people to understand, their unexamined spending habits. So we're not talking about, the rent, utilities, those bills that you kind of expect and know how much it is. It's just that unexamined spending that you don't really think about it. So such as, a cup of coffee, entertainment, things of that nature. And once you understand how much is that costing you a year, then that's where you can see those expenses and you can make different choices. Because at the end, I mentioned this before, is not budgeting or creating a spending plan. It's not about, not necessarily about how much, having more money. It's about feeling more satisfied with your financial choices, feeling better about the money that you have, having that sense of control.
Thank you, Claudia. So my next question is to Roxanne, and I'm going to dive into some of the resources that are available. So what are some financial resources you would encourage people to use to have while working on their finances?
I'm going to dovetail off of what Claudia just said about spending habits. And what she's really talking about is tracking your spending, right? But it's creating a budget. And so I encourage people to get your budget out of your head, because you know how much you make, you know how much roughly that you're spending. Take it out of your head and put it on paper. Put it on paper. This is how much income I get. This is how much expense, and track your expenses. There are so many tools out there that can help us to do that from a digital platform perspective, but you can also do it manually. So digitally, I'll talk about a couple that I know we have, but also a lot of the other banks out there have, and it's Budget Builder. And it helps you to input all of your income, and it helps you to track all of your expenses. A lot of the times, if you have a credit card tied to that company, that bank, it'll track your expenses for you from that credit card or that debit card that you're using. So that's a way to digitize that. The second piece, a lot of us talked about borrowing wisely, and how do you borrow wisely, but pay back to make sure that your credit score stays the same. So the second tool that I'll talk about, or even if you're not using a tool, is to understand and know where your credit score is. We say keep it above 700. Your credit score impacts so many things, whether it is getting that mortgage at a reduced rate, whether it's that credit card, or it's a different between a higher rate credit card or a lower rate credit card. It's also from a job perspective. There are lots of jobs out there that pull your credit report. Apartments, they pull your credit report to see, how does this person pay back? Is this a responsible buyer? Is this a responsible borrower? And so when you think about that, you want to make sure that you're in the driver's seat and you're proactive around your credit score. So we have something called Credit Journey. Notice it's called Journey because it really is a journey. And what that Credit Journey does is, you don't have to be a customer of Chase to use it, because we want to make sure that everyone takes care of their credit. So it tracks your credit score. It gives you information about your credit score. It gives you the power to say, how do I change this credit score by paying some debt down or paying the monthly payments back on time? And it gives you an alert. Every time your score changes, you get an alert on your email that says your credit score has changed. You know, my daughter, she's 25, and she just sent me an excited email. My credit score is above 700 now. And she worked hard to that, but that's because she was getting this monthly tracking, and she knew now she was empowered to do that. The other piece that I'll talk about that you can have the power to do is autosave. If you want to save, you know what you're saving for, sign up for autosave, whether it's through your bank, or a lot of companies do auto payroll deduction. Make sure you're putting money away for that emergency savings plan or that savings goal. And I talked about leveraging your banker. The last thing that I would say is, a lot of us have checking accounts. So put an alert on your checking. It'll tell you whether your balance is going low, where your balance is. That way, you'll avoid some of the service fees that could happen. And the more fees you're avoiding, the more money, more income that's staying in your pocket to help you to get to that savings goal that you're having. So these are just the few. A lot of banks have financial literacy sessions out there that you can go and empower yourself. I know Bank On has something. The FDIC has the Money Smart modules, but there's so much where we can be proactive in learning more about financial literacy. But leverage your banker. That's where you have a relationship. Leverage that relationship with your banker to continue on that path in your journey.
That's such great advice. And I don't want to take up too much time, so I'll ask Carrie, Claudia, and Meredith if you have anything you'd like to add.
In terms of resources, I want to correct myself, is Money Smart, of course, from the FDIC. They have tons of educational information that people can tap. But in terms of the tools the tool that I mentioned early is smartaboutmoney.org. That's the website. And I also highly encourage people to go to Consumer Financial Protection Bureau, CFPB, great resource. You can basically search for anything, and it's an organization that's truly out there to advocate for consumers, right? So you can even do complaints and things of that nature. And lastly, actually, I also want to mention investor.gov as a great tool that people should get familiar with to kind of think about long-term savings and investing.
Yeah, and to jump off of what Claudia said about the government resources, the Federal Trade Commission also has consumer.gov, which is a really good place to get started, especially for that simplified, straightforward information, because they have a dedicated, or they're dedicated to providing everything in plain language. So sometimes we all do it, especially when this is our field. We get a little bit jargony, and we have our special finance words that we use all the time. Consumer.gov is very straightforward, very first step type of thing. So I always do that. There's a fill-inable budget that you can go in through. So yeah, that's another place where I really like to go and look for resources. But I just kind of want to loop back around and just reiterate the fact that whatever tool works for you, you want to do it. You know, I'm one of those people, I could download 12 apps and never look at them again. But if I go to my online banking and print out all my transactions, give me a handful of highlighters and I could separate all my expenses out, and I can see it, because that's the way my brain works. So just figuring out what's really going to work with you and something that you're going to be able to stick with long term. That's kind of the hard part.
And the nice thing about the resources that all these fantastic women have mentioned is that they're free. You know, you don't have to download an app that you pay for every month to do it. You can go online and get these resources for free, which I think is really a great thing.
I think that's super important, right? Because there are a lot of products out there that aren't free and that will charge you a monthly subscription. And if we're looking to save and to cut back on expenses, we want to do whatever is free, and I call it free 99 is for me. And so I really appreciate those comments, especially, you know, I might handle the financial empowerment work in our office, but it's a journey for me as well. And just a few years ago, I was on the first steps of my journey and going to the FDIC's website, going to the CFPB's website, and really trying to educate myself, and still educating myself on how do I handle my finances, my retirement, paying off student loans. It's an ongoing journey. You know, the money, our economy changes every day. You know, 30, 40 years ago, there weren't ATMs, there weren't debit cards and things like that. And now we can usually use Cash App to send to people. And so these things change every day. And so it's an evolving thing. And this journey isn't just a one-stop shop type thing. It's every day the industry's changing. And so how do you evolve with it? And with that, I'm going to move on to our next question, and that's for Meredith. And what are the 3 things you can do to ensure your future financial stability?
So these are things we've talked about somewhat, but they're pretty straightforward, but they're super important. The number 1 is reduce credit card debt. That compounded interest adds up. It's horrible. It's a rut that so many people get into. And if you can reduce that debt, you will be much better off, much better off. The other thing is to make that budget plan. And in that budget plan, you want to also think about unexpected expenses. You know, like the savings piece is just as important as the budgeting piece. A budget with no savings is not the best budget for most people, because we all have unexpected things happen to us in life's twists and turns. So if you have that little cushion, you're going to feel much more empowered and settled. That's super important. And the other that we haven't really touched on is retirement. You're going to turn around one day and you're going to be in your 60s. It happened to me. And I feel really grateful that right from the get-go, I put money into my 401k or into an IRA if you don't have that, a 401k, which is usually associated with a job. You can start small, but it's still worthwhile because it grows and compounds and is invested over time. And many employers will match funds up to a certain percentage of it's usually of your salary. There's a lot of different plans, but that's free money that you wouldn't otherwise get. And so don't miss out on that opportunity by not putting money into your 401k. It's really important, and it's wonderful when you can look at it and say, oh, wow, I have a cushion. I'm not going to have to delay my retirement till I'm 75 because I have no no retirement funds. So those 3 steps are key.
Sure, and I'll just share, Meredith, great thought process, great, proactive steps. And one that I was remiss in sharing is just don't suffer in silence when it comes to your debt. We've all been thrust into situations, whether we've lost a job, whether we've lost a loved one. Our expenses start to outrun our income, right? And we may not be able to meet our monthly obligations. So this is where I would say, let's be proactive and don't suffer in silence. Pick up the phone. The phone is also a resource. Pick up the phone and call your creditor and say to your creditor, I'm having some challenges. They understand. Just don't sit back and think it's going to disappear. It will not disappear. It'll hit somewhere, whether it's bankruptcy or whether it's your credit score, it'll hit somewhere. So pick up the phone and explain your situation, tell your story, and I guarantee you they'll work out whatever solution to make sure that they're getting you back on track. So that's the only other add I will add to say, be proactive around your finances and pick up the phone and call your creditors and say, here's a situation. And not just your creditors. I've picked up the phone and called my cable company and say to my cable company, I've been with you, for so long, or my utility bill, or with my, wireless carrier. I've been a longtime customer. Help me figure out where I can save some money here. And they have been proactive every step of the way to say, here's some things you can cut back, some things you can add to save some money. And that way, that's money that you're saving that goes into your income that you can add to your income category from a budget standpoint. So I just wanted to share that piece that I was remiss in sharing before.
Great. Can I say something about that? While you were talking, Roxanne, I thought about this tool that we use in coaching, which is the financial wheel. Right. So the edge of the wheel is your ideal place to be. Right. So your ideal credit score, your ideal savings. And then, close to the center of the wheel will be like, I'm very dissatisfied with my choices. The edge of the wheel will be, I'm very satisfied. So when we ask people, when we ourselves think about where do I want to be and where am I right now? And you see that gap, right? And you don't think, okay, I'm a 4 and I want to be a 10. No, that would be the wrong thing to do. You say, I'm a 4 right now. How can I be a 5? And sometimes calling and asking for help will get you to be a 5. So I just wanted to mention that just don't, like the worst thing you could do is do nothing. Actually doing nothing is a choice too. You're just taking the wrong choice, but doing something, being proactive, even if it's just asking for help, that will take you to the place that you want to be.
I think that is super important advice in life in general, right? Not just in your finances, right? But that's something that I've had to learn, where I have like these goals and these priorities, and maybe I'm at, like you said, a 4 and I want to be at a 10. And how do you build Rome in a day? How do you eat an elephant in a day? You have to like literally eat it in small bites. And so instead of thinking, I want to save $10,000 in a year, but you haven't even been able to save $1,000 in a year, how do you get from not saving at all to saving to that $1,000 or $500 or whatever, just getting that habit of being able to save? And so it's really good advice to thinking about the wheel and where you are and how do you incrementally get to where you want to be, rather than just pie in the sky. I want to be a 10 when I'm at a 4. And so I really appreciate that feedback. My next question is for Kerry, and that is, why is managing your money so hard for some of us?
I love that question. And one of the things that you just said made me think about starting at a 4 and getting to a 5. One of the things that I would say to you, or to everyone, once you get to that 5, celebrate the fact that you are now at a 5 and you are not at the 4 that you were before. So sometimes we get so focused on how far we have to go, we forget how far we've come already. So the question was, why is this so hard? This is so hard because it's not math problems, right? If this was all about math, we'd probably be off a lot better than they are. But personal finance is so personal. So you have to deal with your internal monologue and your relationship with your finances. Charon, one of the things that you said earlier was about how financial products continuously evolve, right? I trying to cash out my grandma money and it's just, please stop, so we have to figure out how can we build this lifelong relationship with money, because it's always going to be a part of who we are. And how can we recognize how we look at money and how we use money and how we make decisions about money, and realize that it's not a straightforward thing, that it has to do with our culture and our experiences and our financial situation and everything all wrapped into one, that makes it so difficult for some people. But as we said before, just get started. And don't suffer alone. Try to find that partner, somebody you're going to be able to bounce ideas off of. Because once you get into the habit of having that relationship be more transparent, then it starts getting healthier and you start making good decisions because you've respected and you're making those good choices. So I think that's kind of why is this so hard? It's because it takes work. It's not something that all of us just kind of jump into and have this great relationship with finances. We kind of have to build it up over time.
Thank you. And Roxanne, would you like to add anything?
I was just going to say, there's the cultural piece about money too, right? That it's so private, it's so secretive that we don't talk about it too much. And so that's the one thing that we keep talking about. We say suffer in silence, but also don't celebrate in silence. Celebrate when your milestones happen, celebrate publicly. Money, yes, it's personal. Your goals are personal, but this is something, I think about from a family perspective. So it's a family decision. It's a family conversation. And so as a family, we talk about money, and it's a generational discussion that we have. My husband and I have these discussions. My children and I have these discussions, because when you want to change generational wealth gap, you have to impact it and have those conversations intergenerationally. So, and all of us come from it from a different perspective, right? It's the money belief. It's the belief in money. So one might be more prone to saving and say, seize the day, carpe diem. The other might be more prone to, no, I'm saving for a rainy day, but you need to have those discussions to say, how do we come to a happy medium? And if you're going to have commingled expenses or commingled finances, it's even more important to have that discussion. And Charon, you brought up something even more important earlier on the previous segment. You said when you think about generational discussion, you also, not just your children or your immediate family, you have to also think about the aging generation and how that impacts you as well. So I wanted to kind of bring that to say, yes, it might be private and there might be some privacy to it, but don't keep it to yourself. Have those conversations intergenerationally. That's how we're going to change the paradigm, and that's how we're going to have the paradigm shift when it comes to financial well-being.
I think that's super important. So, I come from a LMI background, or a low moderate income background. And so money wasn't really discussed. And when it was kind of negative, right? Where it's just like, we don't have enough. There's never enough. And now that I've had the privilege to go to college and have a good salary job, I try to have more conversations with my family members about saving, investing, putting money into your 401k. If you're, like you all said, if your job is offering match, just do as much as you can. You don't have to max it out, but throw $25 in there during every pay cycle, whatever you can. And sometimes those conversations are really extremely uncomfortable, right? But those are conversations that have to be had if we're thinking about generational wealth, particularly as a Black woman, because we see what the statistics are in the Black community. So thinking about generational wealth and how do you make sure that you're both well, I'm well, as well as my children, but as well as my parents. And so I really, really am hopeful that who the audience here are thinking about not only themselves, but how do they take the information that they're learning today back to their family members, back to their friends, maybe their partners, and just really evaluating where they are financially, but keeping in mind that it's not just you, you're a part of a community, and how does that how do finances impact your community and their well-being as well?
Yeah, and 2 seconds. The way that we view things are different depending on who we are. So to my big sister, spending her money on whatever she wants, that's freedom to her. Me is having commas in my accounts. That's freedom to me, because then if something comes up and I don't want to be here anymore, I can just walk away. That's good. Like that's freedom to me. That's how that is. So we all have these different things. So when we're having those discussions with our family, what does this mean? Because I have this definition in my head. Do you feel the same way? And kind of digging into that. Thank you for letting me be silly a second.
And we have 2 more questions, and I'm going to pose both of these questions to the entire group. The next one is and we really have discussed this, and I know the first answer is going to be reach out to the creditors, but if someone's experiencing hardships, what should they do so they can ensure that their current bills they stay current with their bills? And I will start with Claudia.
I think we talk a lot about this, and it's the fact of really understanding your finances, really tracking where your money is going and making better choice, aligning your values to your financial resources. And if there is not enough income to just fulfill your financial obligations, doing those phone calls, really reaching out to your creditors and explaining to them, because I personally have cases where I truly want to help my clients, but they never, they didn't answer my calls. So, to the point that, okay, I have to tell my folks, yes, you can send that to collections and I need to focus on the next client, which is very sad, but you know what I mean? Like, you have to give your face and explain your situation, and people is willing to help. So I think the most important thing is just kind of reach out for help, confront your financial situation, understand what money, where you are in terms of your finances.
And Carrie?
And being realistic about what you can do. So having that solid budget where you know what expenses you need to keep your family safe, like you need to know that before as you're having those conversations with your creditors, because sometimes people will go in with great intentions and they overpromise, or they promise the moon, and then we're 2 months later and we're back in the same situation and struggling to pay everything. So being realistic about what you can do and having that budget on paper rather than just in your head.
Meredith?
I think sometimes fear is a big barrier, and getting over the fear of contacting your banker, your creditor, whoever it is that's going to help you is really important, because we're all human. We've all messed up. So it's okay to own it and talk about it. But fear, you shouldn't fear doing that. You should fear, as Claudia said, not doing it is much worse than facing the fear and picking up that phone.
And Roxanne, we'll end with you.
I'm just going to say ditto, right? Because it's what everyone said. But if you made the agreement, if the creditor made the agreement with you, make sure that you're sticking to that agreement. So make sure you go in and say, this is the minimum that I can afford, especially during this day of COVID. A lot of creditors really understand and want to work with you. Just pick up the phone and make that phone call and be proactive.
And we're going to end on a more positive note than that one. But what is the best piece of financial advice you've ever received? And I will actually start with Meredith this time.
Oh, thank you. So hands down, the best piece of advice I received was to try to pay double of my debt. So if it's a car loan or a mortgage, once a year. So maybe it's after if you get a bonus at work, or you get a tax refund, or you get some, once a year, maybe it's Christmas money from your mother. But if you get some extra money, double pay the mortgage or the car loan, and it will be gone so much more quickly. And that worked so well for me. We just paid off our mortgage. It took us till 60 years old, but we've paid off our mortgage, and that was a very exciting day.
Awesome. And next we'll go with Claudia, and we have 3 minutes.
Oh my goodness. So for me, it was basically doing a budget, creating a spending plan, really confronting my financial situation. I was divorced 10 years ago. I was going through a difficult divorce, and it was messy. Like, I was putting a lot of my basic expenses on my credit cards. And I reached out to a friend. And the first thing she said is like, we need to know exactly how much money is coming in, how much money is coming out. And I said to her, well, I don't really want to know, because deep inside of me, I felt that I had no control. But through that exercise, in the decisions that I make, I learned that I always have control of my, how I want to use my financial resources. And that was the most powerful lesson that I learned, because it took, it helped me to build assets and buy my house and everything. So I will say to all of the people listening, like, if you don't know how to start, just reach out for help.
Carrie, and then we'll end with Roxanne, and we have 2 minutes.
Okay. Easy breezy, best advice I ever did. Meredith actually said it earlier. If you get a 401k match at work, max it out. The younger you can start saving, the less, the little bits you can do over your career. So by the time you get closer to retirement, you got that cushion to celebrate, rather than that panic of, oh my God, I'm going to work until I'm 80.
And for me, the advice was, it's not how much you make, it's how much you save. And that was really impactful advice. But as I went further in my career, how much you make in terms of the negotiation that Meredith talked is also equally important to help you with that saving piece. So that was the best piece of advice, and advice that has been added to with negotiating your salary.
And we just made it. And so thank you all so much for joining us for this panel of Money on Your Mind, Financial Empowerment for Today's Women. I really want to thank all of our panelists. This was such a fruitful conversation, and for myself, and I hope for all the audience members as well. And so I hope you all enjoy the rest of this R.I.S.E conference, and hopefully we'll see you again soon.
Thank you so much.
Thank you, Charon.